and we're going to jump right back into it. This is going to be about all-inclusive and luxury, the new generation. And we have Domingo, who is founder of PADZZLE, who's going to be moderating this panel. So come on out, let's get it going.
Thank you. Thanks a lot.
Hello, everybody. You're still here. That's nice. And it's the last panel, and I'm very glad to be here. My name is Domingo, and I'm part of the East Chapter board here for ILHA, and at the same time, I work in placemaking strategies, that this could be another conference about it, and marketing destinations. And with me, I have a great panel. We will discuss anything related to all inclusive and what is the next generation and luxury. And with me, I have the honor to have Carolina Lacerda, Fernando, Mulet, and Antonio, who they will introduce themselves and let you know a little bit about their background. So we'll start with Carolina.
Thank you, Anna. It's very nice being here. Carolina Lacerda, currently with EY under their strategy and transactions team, covering hospitality, travel, tourism, and real estate. Was formerly with JLL for 14 years, also in the hospitality practice, covering advisory transactions, and have recently joined EY in this new adventure. So excited to be here.
Good afternoon, everyone. I'm Antonio Fungairino. I noticed you didn't say my last name. There's a reason for that. I'm with Apple Leisure Group, which is part of the world of Hyatt now. And I am in charge of growing the business as a vice president of development, pretty much in Europe and the Americas.
Good afternoon, everyone. Fernando Mulet is my name. I'm the Chief Investment Officer for Playa Hotels and Resorts. Playa is a owner, developer, and operator of all-inclusive resorts in the main tourist destinations in Mexico, Dominican Republic, and Jamaica. We own and manage a portfolio of 23 resorts today, roughly 8,600 rooms. And our business model since 10 years ago, what we did was we specialized in operating all-inclusive resorts under U.S. global brands. So we opened the door for some of the U.S. global hotel companies to enter a space, a category in the hotel industry that they had not penetrated for many decades. And with that, it's just a pleasure to be here. Thanks.
Thank you, everybody. And I'm going to start with Carolina. I mean, it's interesting how, there were many key takeaways from a study that you actually led a while ago, and how the demand for all-inclusive is surging. And what I would like to understand, so the audience also understands here and back, whoever is online, to know about this evolution of all-inclusive through the past decade, I would say is the most important evolution.
Of course. For me, it's exciting to see just the subject of all-inclusive in a conference like this, right? I think if you were to, a couple years back, right, you would never associate all-inclusive with luxury. All-inclusive really started a few decades ago with smaller regional and Spanish groups, right, running all-inclusive hotels, more focused in the mid-scale sector. And very focused on affordable vacations, right? So people would travel knowing exactly what they're going to spend and not have to worry about that. And a lot of times it was packaged, right, together with your airfare, ground transportation, hotel package. So really it was really a stress-free vacations, but it was affordable, more on the affordable, fun, all-you-can-eat style, right? So that's how it started. With a lot of the Spanish brands you probably know, Iberostar, Rio, Barceló, Club Med, and then some local and regional groups. Then came Apple Leisure Group, Playa later on as more institutional party in investing and operating hotels, but it really started more locally. And focused on this mid-scale sector. And what we've been seeing, I guess, in the last decade or so is just the transformation of all-inclusive into multiple categories, right? So today you're able to go into all-inclusive that goes all the way from economy all the way to luxury, right? And that's something recent, right? And that's why today you see all these big hotel groups entering the all-inclusive space, because at the moment now it is a lot more interesting as an asset class and as a product when you go into the upper upscale and luxury. It used to be a very cost-centric product, right? Like a model where everyone was focused on high occupancy, cost efficiency, and you were only able to be in certain markets where the labor costs were low, because your FTEs and all-inclusive are much higher, and it's an operation that needs more labor, right? And today, when you go into this category that's more upper upscale luxury, you're able to get higher ADRs, and with that, focused on revenue generating per available guest, right? Instead of really just the cost and the occupancy side of it, and understanding that you don't necessarily need to be focused on 80+ occupancy to have a profitable operation, but really focused on revenue generating per guest. So today you see all these new players getting into the all-inclusive space, because it's in many cases they're performing better than European EP hotels, and when you increase the rate, you're able to be in other markets as well. It becomes an attractive place for hotel groups to have their guests spending in their loyalty points, and it's a win-win for everyone, right? So I think the all-inclusive has gone from an alternative lodging to a core brand for many of these hotel groups, and it's very exciting to see what, especially some Apple Leisure Group with the recent acquisition by Hyatt and Playa, with everything you've been doing with all the main brands, where you're taking all-inclusive next.
And I kind of following up, Antonio, if you want to add anything about this evolution since you've been for a few years.
Sure. I'll just add something as to how our company started, because it's very relevant. We started because we saw a need to change all-inclusive to a different customer. Our company was a tour operator. We had an airline, USA 3000, some of you may recall. And we were sending a lot of customers from the US to the Spanish all-inclusive hotels. And then one day we realized we should open all-inclusive hotels, but catering to the North American consumer. And that was it. That was a complete transformation of all-inclusive, because once we involved a different customer and we changed our attributes in the brand and the physical layout to cater for these customers, things began to change completely. And in terms of average rate, in terms of non-package income, which is what you spend while you're at the hotel. So that was kind of our start in the year 2001, right after 9/11. And then throughout this 22 years, all we've done is improve and improve and improve based on that initial transformation. As we learned to launch new brands and learn to launch different levels of all-inclusive, we kept improving and improving. We never went back to what we did. We always wanted to get it better. And nowadays, with yesterday, maybe you received an announcement from Hyatt. We launched the Inclusive Collection, which is Hyatt has about 4 collections, and the Inclusive Collections is 9 brands. And currently we have between the Americas, Europe, Caribbean, about 120 resorts, not including the previous SIBA and Silada brands, across pretty much 50-50 EME and Americas. So it's worked well for us, and we are looking forward to to continue growing.
And then from that matter, continuing, so 10 years for Playa Resort, right, Fernando? I mean, what's been that evolution for you?
Sure. I mean, it's going back to what Carolina was saying. I mean, all-inclusive seems today like it's something new, right? But it's been around for the last 30 years, and it's been perfected and has evolved dramatically during the last 10, 15 years. That from a product and quality of service perspective, it's improved dramatically, right? And I think it's started with it was more the focus was at cost controls, and that impacted the service. It was like step back in service. It was like, you want piña colada? Well, it's 500 meters. You got to go find it. The last 10, 15 years, we don't hide anything. It's just we've gone beyond, and it's just the quality of the product, the restaurants, the offering. I mean, you have a hotel of 300 keys with 7 or 8 restaurants. Understanding that the guest is going to stay for a length of stay of 5 days, 4 or 5 days, and they're going to stay with us all the time, right? So you don't want them to get bored. So you have plenty options of restaurants, entertainment. We entertainment during the day, during the night. So it's a higher energy product, and from our perspective, it's not successful because the hoteliers were pushing it. It's just because it's a better experience, and the customer has discovered it and is discovering even more now that the brands are promoting it. And what's changed dramatically in the last few years has been that the hotel global brands, they basically are validating the model right now, and they're saying, I want in. So Marriott is now saying, I'm in the all-inclusive. Hilton, Hyatt, they're committed to it. So they're validating whatever we've been doing, and they're promoting the product, they're promoting the experience, and there's a lot of more marketing money going out to promote the all-inclusive, and it's bringing to our destinations new consumers that before they thought that all-inclusive was a bad experience, was lower quality. Now, because of Marriott, Hyatt, Hilton are in it, they are basically giving it an opportunity. And when the customer experiences a stay at an all-inclusive, it's so easy. You paid already, you prepaid, so there's certainty of cost even before you go there. And then with your kids, with your family, when you experience you go in and you go to the restaurant we have, for example, just one example is we have this candy store. So customers come into the candy store and they're like looking like, okay, do I need to wait? Do I need to pay? So no, it's all available. It's all there. You can touch it. It's just that sense of freedom that I can go and grab it. I don't have to pay. I can go as many times as I want. I mean, that sense of freedom, easy, is very well received by the consumer. From our perspective, the last 10 years, one thing that we did, Apple Leisure Group did an amazing job changing the mindset, and they came up with sexier concepts and brands like Secrets and Dreams. That was at the beginning. In comparison to the Spanish hotel companies, our family-owned businesses, their brands were the last names. So Riu, that's the Riu family from Mallorca, Spain. Barceló is the Barceló family from Mallorca, Spain. So they came up with a different mentality. It was a revenue per person mentality.
Top line versus cost.
Yeah. Correct. The Spaniards and most of the family-owned companies, they were focused on cost per person. That was and the reason was they didn't have the ability to sell. They didn't have the distribution platform to get to the consumer. So it was highly intermediated distribution system. So you needed the tour operator that had the airline, and that could bring your customers, and they were dictating kind of the pricing. So all you could do was like be efficient and make money just managing cost structure. Once Apple Leisure Group comes in and they own the relationship with the customer, they own the airline, they own the travel agents. Now they just need the hotels to place their customers. They had that mentality of revenue per person. We invested at that time, 16 years ago. We started as an investor, and we invested in 17 resorts we had managed by third parties. It got to a point 10 years ago, to your question, that we saw that there was a need. There was a need to differentiate product through branding and through quality, And second, there was a need to diversify in distribution channels, have a more direct-to-consumer strategy and less dependency on the intermediaries and the tour operators. So we started working on our own distribution, global distribution platform, and started with Hyatt back in 2013, so 10 years ago next year. We started this business model that all-inclusive, but operated under a global brand and with access to the brands, global brands distribution. Today, we work with 5 hotel global brands. We have 10 hotels with Hyatt, 4 Hiltons all-inclusive, 3 Wyndham Ultras. One, we opened a luxury collection, all-inclusive resort, the first one, the first luxury collection all-inclusive worldwide. And then we signed a deal with Kimpton this year that will open at the end of next year in Mexico. So that's kind of the evolution from our perspective, like access to the consumer in a direct way, reduce the cost of distribution, and differentiate product through branding and just bringing new customers to our industry or segment. And it's proven that that's exactly the trend today. If you look at the role of the tour operators, that's a big change. The tour operators either have been bought by one of the global brands or they've reduced their size. So their role in the distribution of our resorts, or the sell and market of our resorts, has lessened dramatically. With that, I'll just leave it for the next.
It's fascinating, the evolution in a decade, and what it means, and the perception from obviously the visitors. And that leads to me to what's next, because the perfectionism and keep elevating that experience in this all-inclusive. What are the trends telling us, Carolina, for the future?
Yeah, and I think it's funny, right? Like if you think of Marriott, if you ask Marriott, not too long ago, 5 years ago, if Ritz-Carlton could ever be an all-inclusive brand, they would be laughing at our faces. And look now, you have all these brands from all the main hotel chains, right? Like either creating new brands, either using their own brands under the all-inclusive model, or affiliating with local regional players. So you have all this consolidation, right, that you didn't see before. And I think especially for these families and local all-inclusive players that have been around for many years, they're starting to realize as well on their end that if they don't affiliate, or they don't sell, or they don't partner with one of these big hotel groups, they're going to be left behind, right? Because what a Marriott, a Hilton, a Hyatt can do is just they have access, right? Like their loyalty programs are 100 million plus guests, right? So you immediately have access to not only loyalty points, but this awareness and this distribution that, like Fernando is saying, you can go directly to the consumer instead of paying 20 plus commission to OTAs, to tour operators, to travel agency, right? So that's the goal, is trying to decrease that cost that you have of acquiring a guest. And the properties had done it before with their vacation clubs, right? Also trying to keep that guest in-house and not having to, again, pull that guest from the tour operators. But I think that consolidation is going to be very important, and I think you're going to continue seeing the IAG just announced now with Iberostar, and Hyatt recently with Apple Leisure Group, and be it internal, Hilton is working on their own internal all-inclusive model as well. They partner with Playa in many hotels. So that involvement of the big hotel chains together with the all-inclusive in one way or another, we're going to keep seeing that, right? And I think especially through COVID, right? I think it was funny because through COVID, when people asked us, it's like, who's gonna recover faster, right? Of all the segments, and all-inclusive was never top of mind, and we were thinking like, who's gonna want to be in a 1,000-room hotel in a buffet line, right? Like in the middle of the pandemic, but that's not what happened. Like all-inclusive, all of a sudden was like the topic of every conference, the topic of every investor, because you have these resorts with a lot of options, right? Like a lot of F&B options, a lot of outdoor space, It's something where guests they can plan their vacation because they know how much they're going to spend, new destinations, and all the location as well, because Mexico was one of was the only country in the world that didn't close their doors at one moment during COVID. So it gave visibility as well to some of these products. So I think all-inclusive, I think COVID accelerated a lot of it, but I think we're going to continue seeing a lot of new luxury all-inclusive coming along. If you look at the pipeline from Mexico, Dominican Republic, and Jamaica, 51% or 2% of the pipeline is in the upper upscale and luxury, which is exciting. But it also gives an opportunity on the mid-scale, right? It's going to sort of be left behind, and I think there's an opportunity there as well. So there's more of on an industry level, but I'm sure Fernando and Antonio can talk more on the product level.
Definitely, and so for example, this, the service that we were looking, Antonio. I mean, there are the must-haves in an all-inclusive. There's this evolution, again, the trends about what the new generations are expecting. How are you looking into the future from a population?
Yeah, we actually just created a new brand announced recently. It's called Hyatt Vivid. It's really for new generations. It's interesting. What they're looking for is not what you would expect. They like simplicity. They like to be casual but comfortable, and they go to the hotels for many different reasons. But they want things to work, but they don't want to be hassled. So we created this new brand because honestly, we didn't have anything that would really cater to them, and it's a pretty sizable market of people that we anticipate using it. So the brand is really an adults-only brand. That is high in technology, but very soft and good on service. Obviously in excellent locations where you can either go solo, you can go as a couple, or you can go with your friends and enjoy open concepts, social concepts instead of like enclosed restaurants or things like that, and a lot of entertainment, but all in a very casual and simple way, which is our research says that's what they prefer. We haven't opened one yet, but we are working on it.
That's wonderful. And then I know that during the pandemic, there were even more changes from a perspective. Fernando, I remember mentioning the fact that there was certain traveler types that they were, for example, going to the cruise lines, that they shifted to the all-inclusive. So it's like another win-win. Have you noticed any other expectations that they're needed to meet for these new audiences, for these new travelers, or?
I think it's so. Yeah, that was interesting. The crew passengers, right? It's the same model. If you look at it, it's the similar experience. In the pandemic, just they felt more comfortable. I mean, there's like a third of those cruise line passengers that a third will never go back to a cruise ship. A third will definitely go back because they love it. And a third just they'll wait a bit and they'll a few years and then they'll go back. So we capture some of those customers that is kind of looking for that same experience, the certainty of cost, the energy level, all the optionality, restaurants and the entertainment. So it's kind of the similar experience that we offer, and we capture some of those customers. But I think from no adaptation, we didn't need to change anything because that's very similar. I think for us it's been through the brands and the relationship with the different brand partners in this access to a new consumer base. We get a bigger share of customers that are trying all-inclusive for the first time in their their expectations and what they're looking for. It's just like I think it's pushing the industry to deliver better service and a higher quality. So I think I see this trend going more luxury, and that forces us to be, to design hotels in a different way, right? The restaurants that the design, the amount of money and time we spend now designing restaurants, you know, any of our restaurants in the new resorts that we've just recently developed could be in any city in the U.S. So it's, you know, one Indian restaurant that we had, we built a train wagon within the restaurant, and just so things, we themed the restaurants even more, so there's increasing quality. And then we learned from the pandemic, we learned about, you know, customers are looking more outdoor, more terrace, more spaces outside. We're mixing, I think, going forward, I think that the challenge is to, or where I see differentiation going forward, because on the F&B, because those are critical departments or activities within our hotel operating departments, is the F&B, food and beverage, and then entertainment. I think there's a lot of opportunities to differentiate through in the entertainment arena. F&B, you see Michelin star partnerships between hotel operators in the all-inclusive space and Michelin star chefs. So there's a product out there in the all-inclusive space that has, you know, evolved dramatically, and it's very luxurious today. So.
That's fantastic. I mean, and also it plays a huge role of we living this kind of recession, non-recessions. We've been seeing the demand is there, that we keep seeing travelers joining, and obviously occupancy is high. So apparently that is not going to be an issue. What is the outlook, Carolina?
I think I just see it continue to increase, right? I think today you are with this differentiation in product and with the brands behind it, so attesting that it's actually a quality product, it's in good destinations, and you're able to attract also different types of consumers, right? I think before it was very family focused and in one segment, and today you see you have adults only, all-inclusive hotels. You have hotels that are more prone for younger crowd. The other one for family with younger kids. So you have like this different product for every different guest type. And I think even like, I think you're gonna start seeing more like group business, right? Like why not? Why can't, it's so much easier like to even budget, right? Like for a company, corporate groups, corporate travel, depending on some of these all-inclusive, they're not only in resort locations, some are getting into urban locations. And if you can already have, right, like everything inside that one package rate, why not, right? So you could easily attract corporate guests as well. So I think you're able now to just diversify more your guest profile as well. Mm-hmm. And it becomes more and more a product that becomes very financially viable, right? And it's attractive margins, attractive just value of the hotels. So, and that's when you see institutional capital coming in, right? So you see more and more real investors interested. Now in Mexico, for example, everyone wants to be in the all-inclusive space, right? Like before it was hard, like and it was very focused on the families, and you wouldn't see a lot of transactions, and now most of the transactions that are, at least the desire is to be in the all-inclusive space. So with that, I think it's just gonna continue growing, and it's gonna be, and the differentiation as well is you're gonna see more of, you're not gonna need it to be all-inclusive of 500 rooms or 1,000 rooms. You're gonna be able to do 200 room all-inclusive, right? Because as you increase the rate, you don't need that, just the mass, right? You're able to make it work with smaller rooms and keep the luxury component of it. So I think as long as they continue innovating and differentiating the products, because I think that's what guests want, and offering stress-free vacations, I think it's a trend that will continue.
And you
going.
can see a shift, I mean, what it was from what is today, and also you can see how all the big groups, you know, like Apple Leisure Group, Playa Resorts, they're obsessed in this sort of how we can delight and elevate that experience for the guests. So Antonio, what destinations, new hotels, innovative experiences or renovations can we look forward to from the Inclusive Collection in 2023?
As far as openings next year, this year we just opened our first property in St. Lucia, the Solitary Marigot Bay. That was open a week ago. And then next year, we're going to open a Secrets in the same island, St. Lucia. It's our first time we've been in St. Lucia. We always wanted to be there, wonderful island. In Dominican Republic, we're opening 2 resorts next year, both in the Punta Cana area, Dreams, Flora, and Secrets, Tides. In Mexico, we have a few openings. We just opened a Secrets in Moshe, which is an amazing property that also has a Secrets Impression, which is our highest, most elevated, luxurious brand. I urge you, if you haven't been there, to give it a try. We are opening in Mazatlan, our first opening there with a Dreams. We are opening in Tulum, a Secrets next year, and I'm missing one. I'll remember and come back to you. But yeah, a lot of activity, and the pipeline looks very, very strong. People are still getting financed in these destinations. I'm not so sure. Right now, I know the interest rates are a little bit higher, but if you closed early this year, you're fine, but for now, probably not. But the owner profile outside of companies like Playa, it's high net worth families. So we continue to grow with them as well.
And what are we going to see, Fernando? Playa is like definitely now 10th anniversary, but there are like upcoming announcements for 2023 for the whole team.
Sure, I think it's we'll continue to bring new brands into the space. Excuse me. I think there's the brands are looking to enter many brands that are not represented today. So we're an ideal partner for them because we have the capital. We can invest. We have the understanding of how to reposition hotels. We have our own distribution platform, and we understand how to work with the global brands platforms, distribution platforms. And today we're generating just 50%. Close to 50% of our business is direct, through direct channels. Wow. And half of that is through Playa proprietary channels. So that we continue to execute on that strategy. We'll have several openings and takeovers next year, roughly over 1,000 rooms that will take over next year. And I think just a comment based on what Carolina and Antonio said, I think the opportunity and the challenge for the all-inclusive would be the more institutional groups, more liquidity and more institutional groups entering the space. Today is still controlled by ownership, is still controlled. The profile of the owners is this high net worth family-owned companies. And
in Europe, it's the opposite. It's institutional. Here is family-owned, except for Playa, really.
Exactly. Yeah. So I think that's the challenge. But I see more brands coming in, more unique brands like Carolina was mentioning, right? It's the Ritz-Carlton can be an all-inclusive round, the W brands, and I think that's exciting because the biggest change in the way that I define that is all-inclusive is not just an asset class economy, just decent service. It has become a way of vacationing, and it's compatible with every level of quality at every segment. So we'll continue to have representation at every segment. We're the expert operator, multi-branded, right? So we can offer our partners, our owners, the access to multiple brands, and we can help them, assist them in the process to select the best brand that will maximize return for their property, their investment, and also advise them on how to do the repositioning.
The reposition, the transition, obviously, as owners and operators, there's a huge knowledge about what's best to do. And
yeah, just a comment. Yeah, and I think on the ownership side, I think a lot of the institutional capital is a little bit was uneducated in terms of what is the all-inclusive, how it works. Right. P&Ls are different. A lot of these family-owned hotels weren't even in, right? Like the accounting format was different. So it was a hotel, but it wasn't, right? So for them, even to value it was so. I guess with Playa and Apple Leisure Group, and now the hotel brands coming in, they understand it better because, like, I think every group is trying to normalize a little bit the operation, the accounting system, and it makes it in their mind, something that is a little bit more trustworthy, right? Like less risk, I think, when you get these hotel brands behind it. And I think that's why we start seeing like these funds and private equity getting into the investment of these hotels. So it's a little bit of the education, right? And that's why Playa is so important for some of these brands, because they don't know how to operate. It's not just rooms, right? It's a whole, it's what you said, it's an experience, because it's like the entertainment, it's the F&B outlets, you have to understand how to operate a hotel like this. You can't just go from operating an EP to operating an all-inclusive, because it's a completely different world.
Look, at the beginning of our history, we owned 17 resorts, right? Operated by PADZZLE, by AM Resorts. I remember, just as an anecdote, I remember conversations with bankers from New York, and so what do you do? Playa, and what? Oh, hotels. Oh, interesting. Resorts. Oh, which resorts? That's the next question you get. What resorts? You know, the Barcelona and Los Cabos, the Barcello. What you talking about? Secrets, dreams. Oh, okay.
No, they knew that one.
And then it got to a point. No, they didn't know that. It got to a point that when we executed on our new vision and we did the deal with Hyatt. That's when I was able to use one example. And it's to your point, right? They didn't know, they hadn't experienced any of those all-inclusive resorts. But I remember that I was using one deal that we did that was, look, banker, you know the Ritz-Carlton in Montego Bay, Jamaica? Oh, yeah, I've stayed there many times. Well, we bought it, we invested $100 million, and that's our Hyatt Ziva Zilara resort. Okay, I get it. Now I know, by association, just they got a sense of what kind of resorts we're doing, right? So, but I agree. There's the educational process, but now with the brands in it, it's just, it's definitely easier.
It's so interesting, because also in certain panels this morning, there was approached the idea of execution is everything, consistency is everything. So from a consistent operations, obviously, a Polish group and Playa, they deliver, and there's this kind of, we can guarantee this. But my observation will be on what's going on in this past decade, and obviously what's coming in the future is that all-inclusive is glamorized now, right? So it's this idea of there's glamour, there's the education that it's very important, which we need to, but there's so many out there that now you can relate and say, do you know this property? Yeah. Okay, so that's what we're talking about. And therefore, there's a huge element in helping, adding on more and more and more. It makes me wonder, the growth comes from different places, right? It will be adding brands, and I'm sure that there will be many new announcements coming in the future, but also adding geographies and even types of, we talk leisure and vacation, but that way of vacationing could be extended to, now that we have, people working from home, hybrid, how that can, in terms of trends coming up and brands joining this all-inclusive universe.
I think you'll see also different, mixed-use projects. Branded residences entering the all-inclusive, which has not been done yet. Mm-hmm. I think now with the brands entering the space, I think you'll see more of those, which could open up new markets, to your point.
With the brands.
Correct.
With the brands,
destinations where before we didn't look at it. Because for us, it's always been the key variables or the key metrics were airlift and labor cost. So those were to determine if a market could work for us was that. And I think now with our ability to drive higher rates and generate more traffic through our distribution platform, we can justify and be successful at our destinations where before we didn't look into it. So yeah.
And I think you already have some, right, in ski resorts. It's not, because we think of all-inclusive and we think of beach, right? Like we think of waterfront properties and swimming pools and like everything by the sand, right? Like it's not only that, right? Like you already have, Club Med is a great example. They do a lot of all-inclusive in different, all leisure, but different scenarios, right? So ski resorts, mountains, whatever it may be. And I think urban, it's another one where, why not, right? And I think, as long as you offer, right, everything that someone that's working remotely or the leisure, right, like the infrastructure they need, I think it's why wouldn't you, right? It's going to different product, but still in the same model.
Absolutely. It's like an expansive right now momentum. So I think that everybody's like wanted to ride that wave. Antonio, as the demand is increasing, obviously, for luxury experiences, how is the World of Hyatt Inclusive Collection competing with other hotels and resorts for investors and guests?
We try to stay ahead of the customers in terms of understanding their changing needs, and a lot of that is what we just did, which is the consolidation of the inclusive collection into those 9 distinct but complementary brands that range between upper 4-star to very high luxury, probably not defined by stars, but and then what we do in between those 9 brands, we have different destinations, we have different markets, and we know that for a certain destination and for the type of hotel, you're going to have certain attributes that maybe within the same brand you're not going to have in the next destination. For example, if it's a conversion of an existing resort in Riviera Maya, and it used to be Amelia, sometimes it is unjustified to spend $100 million to renovate it into a particular type of hotel. But you can do a program renovation and make it a very good all-inclusive. But that all-inclusive, even though it's a Dreams, it can be different than the other Dreams. So it helps the owner and it helps the customer, because each customer can plan ahead and say, okay, my budget is $5,000. I'm going to spend 4 nights in this part of the world. I want to see that beach. But when I'm there, that's what matters. They can really tailor their experience, whether it's a family, whether it's a couple, we're seeing a lot of people traveling alone right now, whether you're doing a workation. There's different things that we do internally into those brands, and people begin to associate, okay, Dreams Puerto-Venturas, that's a great place for kids. Or Dreams Playa Mujeres, well, not that if you want entertainment, you go there. We have a certain level of consistency, but we do differentiate across brands as well, in between brands as well. So I think that's going to continue, because people want to customize. They want the safety, they want the comfort, they want the beautiful location, but they want to be able to customize their experience depending on what they are trying to do. And most of them right now want to make sure that they come back and they don't forget that experience. They're really meaningful for them. They're doing it for a certain reason, and they're traveling. A lot of people that were not traveling internationally, now they are, especially after the pandemic.
It's a good point you mentioned, experiential, right? I mean, I think that the all-inclusive, you've been leading the experiential earlier than any other properties. But I'm mindful of time, and I would like to know if we might have some questions from the audience at this point. And of course, then we have the wonderful raffle, and I don't want to be also stepping into maybe people that they need to depart for flights and so on. Do we have anything from the audience? Don't see anything. Everybody wants to
I don't see anybody with their hands raised.
Okay, I might have a last question, and I think it would be something for everybody to answer. We talked about the growth in geographies and obviously growing in brands. Where do you see this growth geographically in the market?
Yeah, it's always been focused on markets that have lower labor costs, or easier labor costs, I would say, more efficient one. So it's been mostly focused in Mexico, Dominican Republic, Jamaica, some parts of the Caribbean, and Spain, obviously, right? So I think Mexico is one where I think you'll continue to see there's a big pipeline. Luxury-wise, Dominican Republic right now has a huge pipeline of luxury, all-inclusive being built. And I think those are the markets that have great airlift, have already the profile for all-inclusive and good infrastructure, and it's just easy destinations labor-wise. But I think, as Fernando mentioned, right, as you move that rate up and you're able to afford a little bit more higher cost, I would say, especially in the labor side. I think you're going to start seeing more Caribbean destinations that weren't there before because of the labor cost. You're going to start seeing it. We have a little bit in Colombia and other parts of South America, even though then you have the air access is a little bit more limited. And you're going to start seeing parts of the U.S., I think. I think the U.S. also has, the labor was always an issue with their all-inclusive, but I think there's an opportunity for some resort markets in the U.S. to see growth there in the segment.
Antonio.
Obviously, outside of what Carolina just mentioned, I think in Europe there's good opportunities, and North Africa as well. I think we just signed a five hotel deal in Bulgaria. In the Black Sea, but it's beautiful. I honestly thought that we would never sign something there, but there is a reason for that. And I think in the future, Asia Pacific is going to be big in all-inclusive. Once the right players get to do what we do and concentrate on that value proposition, I think Asia Pacific is going to be the next one, and North Africa as well. We're going to see an upgrade in all those 4-star resorts in Morocco, Egypt, and all those.
Fernando.
I agree. I don't think they left any region untouched. So we have a lot of room to grow. Basically, I think it's we're in the Caribbean. We believe that there's a lot of markets that we can grow into in Central America and in the Caribbean islands. And we think that our business, and it's already been exported to some other continents. So definitely we look forward to looking at opportunities, and we do today in Europe, in the Middle East. We've been working on it too. So I think this is it's a model, it's a business model that is successful not only because the customer demands it because of the experience, but it's good business. So it's very efficient, right? The predictability of occupancy, our ability to drive traffic through our hotels, and the way we design it and build it, there is very efficiency, all the synergies that we can generate. We have better margins than our competitive model, so the European plane. So I think it's here to stay, and we look forward to continue growing.
That's wonderful. I'm very happy and thankful for your time, for being here, and for the audience being also so attentive. So we close this panel, which is the last panel, and then we will actually lead to the fun part, which is the raffle.
Yes.
And yay! We're going to go there.
We love that.
Exactly. All right. So thank you so much.
Excellent.
Thank you.